who have brought this program together for you. Stan was not able to join us from Butler County, but I believe Aubrey's here. There she is. Do the princess wave there. Come on. We also have Frank. He is the president and Big Kahuna at the Monroeville Chamber of Commerce. He's got to work on the princess wave. There you go. Also, we have Steve, who is here from the SMC. He is the executive director and a very quick learner. Unable to join us today was Barbara McNeese from the Greater Pittsburgh Chamber of Commerce. So, as you can see, this is an issue that impacts us all, and so we're all working together to benefit the community that we serve. I'm also very happy today to present, in my eyes that are suffering, the moderator for today's event. It's Christine Whipple. She is the Executive Director of the Pittsburgh Business Group on Health. She's served as the Executive Director since 1993. The Pittsburgh Business Group of Health is a regional, employer-led nonprofit coalition with a national reach that promotes education, collaboration, and innovation among members of the community, and it drives to deliver value, quality, and health care and benefits. So, very exciting, and I do believe that health care is going to be very exciting. Without further ado, Christine.
Thanks a lot, Becca, very much for providing me the opportunity to join you this morning for this kickoff of the Partnering Chambers quarterly series on the Affordable Care Act. Becca did give you a brief introduction to the PBGH. I just want to let you know that we are the only employer-led coalition in the Pittsburgh region supporting our members' efforts to manage and administer health care and benefits. We represent large and mid-sized self-employers. We are 94 members strong, and across those 94 members, they represent and provide coverage to close to 1 million people across the country, almost half here in the Pittsburgh region. 2/3 of our members are national or global companies. And we do provide a variety of programs and services, and included in your booklet there, and I just wanted to also confirm that we support employers' efforts not only with our Corporate Wellness Challenge, but also providing a Living My Life program for diabetes that provides one-on-one coaching for employees and their dependents living with diabetes here in the Pittsburgh region. And we do want to thank and acknowledge the organizing partners for this ACA series who were introduced to you earlier. And all of these organizations have gotten together to provide the forum to delve into the legacy, the implications, and implementation of the Affordable Care Act, as well as to provide up-to-date information on the rules and regulations of the law. Industry and government experts will provide the best available information they have so you can be informed with data-driven information to make your decisions for the welfare of your businesses, your employees, and your community. And it is a great privilege for me to introduce our expert for today's program, Pennsylvania Insurance Commissioner Michael Consedine. Commissioner Consedine has been at the forefront to obtain actionable information on the various provisions of the law. He is working side by side with Governor Corbett to determine how best to implement the ACA for our state. Commissioner, who was appointed by the governor and confirmed by the Pennsylvania Senate in April 2011, is entrusted to enforce insurance laws, protect consumers, and monitor the financial solvency of domestic insurance companies here in Pennsylvania, which is the 5th largest insurance market in the country. The Commissioner was also elected Secretary-Treasurer of the National Association of Insurance Commissioners in December 2012. He is a graduate of James Madison University with a bachelor's degree in political science and journalism, and graduated with honors from Widener University School of Law. We will hear formal remarks from the Commissioner, and then we will follow with a question and answer session. I believe that there's an opportunity for you to provide questions on some index cards that could be provided. So at this point, I'd like to turn it over to the Commissioner, and we are looking forward to your insights this morning.
Good morning, everybody. Can you hear me on this mic? Yeah. No? Yes? Not really? All right. Let me switch to the bigger one. And if that doesn't work out, I can use it to do karaoke or stand-up comedy. How's that better? Well, good morning, everybody. As was introduced, I am Mike Consedine, the Pennsylvania Insurance Commissioner. It's a pleasure for me to be here today. It's been a great week, and this tops off a great week. My younger brother just got back on Monday from Afghanistan with the 101st Airborne. Just finished my last budget hearing yesterday, and let me tell you, that's sort of like finishing final exams back in high school or college, and I get to be with you all this morning. So, you know, a road trip to Pittsburgh is a great way to end the day off. So, thank you for allowing me to talk to you today about a subject that I've been talking about for, it feels like years at this point, and I think it has been years at this point. And, you know, my press person loves me coming to these things because she gives me these wonderful, thought-out press statements and remarks that she spent a lot of time making sure that I stay politically correct. And I'm happy to read that for you, or we could just have a discussion and I can give you an inside sort of perspective on what's going on in Harrisburg, what I think's going on in Washington, and maybe what we can expect over the next few months. So, all of those in favor of the formal stilted speech, raise your hand. Okay, all of those in favor of us just having a discussion, show of hands. Okay, all right, close the doors, you know, pull the chairs out close them, and we'll talk. So, you know, let me start with the subject of exchanges, which I know is a topic that most of you are probably really interested in hearing about. You know, and I'd love to be able to stand up here before you today and say that 9 months from now, when the federal exchanges come online, that they're going to work perfectly, that you guys are going to have a flawless shopping experience, that you're going to see your health insurance premiums go down by 10%. I'd love to be able to tell you that, but I can't at this point. And I don't like to be able to tell you that I can't, and I can tell you that the governor doesn't like to be able to tell you that we don't have good answers to some of these questions, and that you know, we don't have the right answers for some of these questions. The exchange issue has been the one that has been taking up much of our time, and it's an issue that I know businesses are directly dealing with here right now, because 9 months from now we will have a federal exchange operating here in Pennsylvania. 9 months, that's not long at all. And I know many of you who are businesses are already probably getting some of the preliminary information from your insurance companies about that shopping decision that you're going to have to make come fall. And actually, let me just get a show of hands. It gives me a sense of sort of the audience. How many of you work for employers with 50 or less employees? Okay, good part of the room. How many of you are 50 or more employees? Okay, all right, so far more on the smaller, what we call the smaller employee side, which is, you know, the group that's going to be most impacted by this exchange decision. And let me take a step back, because when I talk about exchanges, that's one of those terms that everybody hears and, you know, oftentimes act like they know what the heck I'm talking about when they really don't. And that's because it's a confusing term. The act itself is confusing. But when we talk about exchanges, what we're talking about is essentially an online marketplace that's going to be set up under the Affordable Care Act, where small businesses and individuals are going to be able to go and shop and price health insurance. So it's going to be a fundamentally different way of purchasing health insurance than you probably have been doing for, you know, since you've been doing business. Mostly it's been broker-driven or individual interactions with insurance companies. This sets up an entirely new dynamic, entirely new you know, mechanism for purchasing insurance. And again, this is something that the ACA has set up really in an effort to create more accessibility to health insurance. And I won't get into the weeds on the ACA because it'll quickly put us all to sleep, but you know, this is a fundamental shift in the marketplace, and one you will be hearing more and more about. The challenge that we had as states was, what should we do when it comes to the exchange? The ACA gave states the option of either setting up our own exchange or having the federal government operate our exchange for us. And that really set up for the Corbett administration and for my department, which was charged with looking at this issue, you know, the biggest sort of decision-making process. You know, what was best for Pennsylvania? And we started in on that decision-making process very early on. Many of you may have been involved in some of the hearings that we held across the state almost a year ago, where we reached out to stakeholders across the Commonwealth to really get your input on what you thought might work best. Is it a state exchange? Is it a federal exchange? And I will tell you, early on the thinking, and again, the governor and there's been much talk about how political this decision was in different states. Governor Corbett, my instruction was, I just want to make the right decision. All options are on the table. You go out, you do the due diligence, and then come back to me with a recommendation of what you think works best for Pennsylvania, and we'll work through it from there. So for Pennsylvania, a state exchange option was always on the table, and something that we frankly took very seriously. Again, for those of you involved in those hearings, or those of you who've gone to our website, you will see that we did a fair amount of due diligence on building a state exchange. The thought being, that would give us more flexibility to build something that made sense for Pennsylvania, that we would have more control over it, that we could do things to contain the cost and be more consumer friendly. That was the theory, and again, we went pretty far down the road in examining that option. But what happened is we got to a point probably about a year ago where we started to have a lot more questions that weren't being answered. And again, the ACA envisions lots of regulations, lots of guidance, some of which we got, a lot of which we waited for, some of which we're still waiting for. And the exchange stuff was part of that. And we were waiting and we were waiting. And we got to the point where we have interactions with the feds all the time, but we weren't getting answers to the questions we needed. And we had a timeline, a clock that was ticking down really fast. And so we got to the point where, we just weren't in a position to make a decision for the state that made sense for us. So, the governor at that point said, we have to make a decision. We're being put in a position of making a decision. And we decided, excuse me, my cold is flaring up here. We decided at that point we needed to, take a step back and wait. And again, let me, when we talk about exchanges, we talk about, sorry, excuse me, my cold is flaring up here. Right, get a glass of water. Sorry about that. So again, the exchange decision was based in part on having the right information. We just didn't have the information we needed. We were also being put in a position to thank you. Oh, okay. So lack of information was a big issue for us, but also the cost issue was a big issue for us. Again, if you build your own state exchange, one of the issues with that was you have to pay for it going forward. And for us, that was looking like maybe $30 million a year, maybe more, maybe $100 million in some cases. California was looking at an exchange where their annual operational costs were in excess of $100 million a year. And that's, that's money that would be coming out of Pennsylvania's pockets. So we took that issue very seriously. And last, what you hear from the governor, is the flexibility issue. We wanted to be able to build something that made sense for Pennsylvania. We wanted to construct something that we thought was workable, innovative, unique. I always use the example of the iPad. Exactly who do you want building your iPad? Do you want the government to build your iPad? Or do you want Apple to build your iPad? And when it comes to essentially a state marketplace where you're talking about purchasing health insurance on an online marketplace, who do you want building that? Do you want government to build that? Or would you like to leverage the extensive technology, information, ability that exists out there in the private sector to do that? And our decision was, maybe that's not something government should do. Maybe that's something that we should leverage the private sector to do. And we pushed the federal government to see if we could do that, if we could have the ability to leverage private sector resources to build an exchange in Pennsylvania, to operate an exchange in Pennsylvania. And what we heard back was, not so much. We're really interested in having the government do as much of this as possible. We're really interested in having state infrastructure built around us. And that was not something that really interested us. So at the end, we made a decision that for right now, we're going to take a pass on building a state exchange, but the governor clearly left the door open to doing a state exchange going forward. It's something that we have the ability under the law to take a look at year to year, and we're going to do that. We're going to make sure that we have the decisions and information we need to make the right decisions. Let me switch gears to rates and rate shock. How many of you, over the course of the last 3 years that the ACA has been in effect, have seen your rates go down? Okay. How many of you have seen your rates go up? Yeah. Okay. And that's that's another point that we're grappling with. And thank you for making the point that we're seeing in the marketplace firsthand at the insurance department. Accessibility is great, and that's one of the things that the Affordable Care Act admittedly does do, is make healthcare more accessible. But accessible healthcare is really secondary to affordable healthcare. I think you would agree. I'm reminded of the James Carville famous political axiom, it's the economy is stupid. But when it comes to healthcare, it's really affordability stupid. And that's the issue that we're most concerned about with going forward with the ACA, and that we're seeing firsthand at the insurance department right now. And you'll hear a lot more about this in the coming months in terms of rate shock, is the term we use. One of the things the ACA did was basically change the way health insurers are going to rate and price health insurance policies. It's going to level the playing field. So when it came to basically doing health underwriting just based on health status, that's no longer an option. You have very specific requirements in terms of how health insurance can be rated and priced. And while that's good on the one hand, it's not so good on the other, especially if you're a young, healthy adult. One of the areas we're most concerned about is seeing rate shock with young, healthy individuals who, right now, we're seeing projections that their policy, their health insurance premiums may go up as much as 60% in some cases. And if you're a 25-year-old right out of college, you're paying rent, car insurance, and you see your health insurance premium go up by 20, 30%, 40%, 50%, 60%, you have the option under the ACA to take a pass, to basically take a penalty instead of purchasing health insurance. The objective is to purchase health insurance. Under the ACA, everybody is required to have health insurance. You don't have to, and if you don't have it, you pay a penalty. The concern is with young, healthy adults is they take a pass. They pay the penalty, and they don't go into the exchange. And that same dynamic, frankly, is one that we're concerned about potentially happening with small businesses, too. We'll talk a little bit more about that. But the problem with that is if young, healthy adults decide to opt out of the exchange, then it really messes up the whole sort of financial model that underlies the exchange, because you have to have young, healthy folks in there fully participating in the exchange so that it offsets the premiums for those of us who aren't young and so healthy anymore. And if that doesn't happen, it's going to, the rate shock that I talked about, it's going to happen like anyway, just as we adjust to the new pricing mechanism. The hope was that over time, though, that would go away and even itself out. And again, we're going to have to watch that very closely because if we don't see the level of participation in the exchanges by young, healthy individuals or by small businesses, then you're going to have a situation where that pricing shock potentially continues. It's an issue that I know Governor Corbett's very focused on, other governors are very focused on. We've raised the issue with HHS, and the request is, not to undo the ACA anyway, but to give us more time to adapt the marketplace to that rate shock so we can adjust to what we're going to see happening. So those young adults or those other segments that are going to get hit don't get hit all in one fell swoop. And thus far, they've not indicated a high degree of flexibility on that point, which is surprising. So, when we made the decision to move forward with the federal exchange, the next question that I'm often getting, and I would expect to get today, is, apart from this rate shock issue that you see playing out, what else do you expect to see with the federal exchange? How's it going to operate in Pennsylvania? What's it going to look like? And again, love to be able to sit here and draw pretty pictures for you and have these fancy diagrams and show you exactly what's going to happen. We don't have the information yet. And that, frankly, for us is a big concern because we're 9 months out. 9 months out. And you know, even though we have opted for a federal exchange, that doesn't mean we've given up our regulatory enforcement authority or our desire to proactively reach out to consumers and not only educate them, but protect them in the marketplace that we see coming. So we continue to push for more information from HHS on, you know, well, again, what's this federal exchange going to look like? How's it going to operate? They also have to appreciate that, you know, there's a back office part to this, an IT part to it. You know, their federal system has to talk to our state system. For those of you who are in the IT world, you kind of get a sense of what I'm talking about, especially when I can tell you some of our state systems aren't the most up to date. You know, we're talking about you know, systems that have been around for 10, 15 years, which is a lifetime in the IT world. So, you know, we have to be able, our Medicaid system and our CHIP system has to talk to this federal exchange. How's that going to work? You know, talk to us. Let us start building on our side. This is a bridge. You're building from your end, but we've got to build from our end. And, you know, again, we're not getting the level of engagement that we would hope to get. And as, you know, as the insurance regulator for the marketplace, and really sort of the consumer, you know, the watchdog for consumers, it makes me very nervous that you know, we're all going to be in a situation 9 months from now where you know, the rules of the road still aren't really clear, and you know, that's something that we're not happy with. The governor has reached out to Secretary Sebelius. Some of you may have read about a meeting that he will be having with her in the very near future. So I hope that's an issue that's going to be addressed. I expect it will be an issue that's going to be addressed. Beyond that, let me talk about a few other sort of quasi-technical parts of the Affordable Care Act, and then we can move into questions, which I far more prefer to do than sit up here and talk with you. Essential health benefits. Some of you have heard about essential health benefits. Essential health benefits is essentially, you know, what are the products on the exchange that's going to be operating? What do they look like? What are their benefits? What are they going to provide? What are they not going to provide? We got just last week, again, you know, 9 months out, we're just getting the final regulations last week on the essential health benefits. Right now, the feds have identified, with input from us, the benchmark plan for Pennsylvania. And there were several different plans that they could select from, and they went with the largest small group product, which is the Aetna point of service product. You know, what that means for those of you in the room, and we did a study which is available on our website, along with a lot of the other stuff that I'm talking about today. We did a study of our marketplace and the HB design issues. And what we found was, for the most part, all of the different plans we could select from were very similar in terms of the coverages they provided, as well as the pricing. So what that means for you as business owners, employers, employees, is that the exchange products from a benefit perspective are probably going to look a lot like the products that you have right now. So the last I touched on, because I know there are some brokers in the room, agents and brokers, is the issue of navigators. Again, I don't know how many of you are familiar with navigators. It's, you know, the ACA has this term, and it's really designed to be individuals who help people with making choices, excuse me, helping make choices with purchasing on the exchange. Our concern with navigators is, you know, how are they the same or different than an insurance agent, and how will they be regulated? Because there's a very fine line between sort of helping somebody make decisions on exchange products and actually recommending products, or, you know, guiding them to specific products. And that, in our view, is really what an agent does. And we have very strict laws in place dealing with the licensing and regulation of insurance agents that are designed to protect, you know, consumers. We don't really have the ability to regulate, at this point, navigators to a degree that we would feel comfortable with. And that's an issue, again, we're waiting for final regulations on. But you'll see, I think that's an area where there will be a real dynamic between the states going forward and the federal government. And, you know, we're not saying you shouldn't have navigators. We think they will serve a valuable role. But we want some ability to make sure that the job they're doing is correct, and that they're not crossing the line into agent-producer activities. And again, it's going to be an area where I think we're going to probably get some pushback from the feds, and it's going to set up an interesting federal-state dynamic. But again, our job as insurance regulators regulation of insurance is all at the state level, is to protect consumers. And we've got to be able to do that. We're very serious about doing that. So, you know, I think you get a sense from the discussion today that, you know, we're moving forward into really unknown territory. I have told people the next year is going to be dynamic, challenging, turbulent, pick your adjective. And I know that's going to be a stressor for businesses and individuals. But please know that, you know, we are walking that path with you, the governor, the insurance department, myself personally. We know the issues that you're facing, and we are working really hard to make sure that when we get to that point, we've got good answers for you and good guidance, and moving forward that we are there to, again, ensure that we have a competitive and healthy insurance market in Pennsylvania. So with that, again, let me open up to questions. Excuse the cold today, but I'd be happy to, if there are some questions, I'm happy to answer them, but actually welcome more of a dialogue here.
Well, first see if anybody has any questions.
I have a question, and this is probably a dumb question, but not having the knowledge of how this whole thing's going to process out. So once the exchanges come into place, will I no longer be calling on my friends at UPMC or Highmark to buy a policy, a healthcare policy for myself? Must I, or will I have to go through the exchange in order to make that acquisition?
Did everybody hear the question?
Yeah, the question was essentially, are we required to purchase health insurance through the exchange? And it's a very good question. And actually the answer is going to depend, you know, the answer is going to change state to state. But in Pennsylvania, no, we still envision a marketplace outside of exchanges where you can go and purchase insurance, you know, in the traditional ways. There's an asterisk there, a little caveat. The caveat being, if you want the tax credits and the benefits afforded under the Affordable Care Act, the only way you get those is through the exchange purchasing. So again, the tax credits, and that's, you know, for those individuals who qualify for those, it obviously probably makes more sense to purchase the product on the exchange and get the benefit of theirs.
There were some questions that were submitted previously. One of the questions was, are there any plans to merge the individual and small group markets in Pennsylvania?
No, we have no intention at a state level to do that. The ACA gives states the option down the road here of potentially merging small group and large group markets. Our thought is that we're not in a huge rush to do that at all. Again, you've got a sense today from the points that I've made of the dynamics involved in just adjusting to the current changes that are coming down the road. We don't see a reason right now to further exacerbate that by immediately expanding it to the large group market as well. On the large group market, I should add, I have it in the actual written comments that I stuck to the speech. You know, we've worked very hard, especially at the national level, to make sure that large employers still have access to self-insurance to a self-insurance option. There have been, again, efforts both at the federal level and in some states to reduce the ability of large employers to self-insure. We don't think that's a good idea, and the governor's been very vocal about let's ensure that we still have that as a viable option for large employers. Self-insurance doesn't make sense for everybody, but for those who it does, we still want it there as an option.
Yes, sir.
Could you speak to the governor's decision on the Medicaid expansion?
The question was about the Medicaid expansion.
I can, although I'd love to punt it to my colleague at the Department of Public Welfare, and actually it's a question that I got yesterday at the budget hearings. But I can, because it's one that you know, the governor has been very clear about, and we as cabinet members all have been in discussions about, because it does have an impact beyond just the Medicaid program. It has impact on the state generally. And what the governor has said at this point is, you know, we have not closed the door on finding ways to help more Pennsylvanians, be it through the Medicaid program or other ways. What we have been trying to do for the last 2 years with HHS, and you can go through, again, a lot of these are on our website, we've been reaching out to say, we want to help more Pennsylvanians. Some of it we think we can do through the Medicaid program. We think that current system is broken, however, so we need the flexibility to do it in ways that we think make sense for us. If you're willing to work with us, we're willing to explore those options. And to date, again, we've not put a lot back. Positive development this past week. I think it was it was in the press just yesterday or the day before, as I mentioned. The governor's going to sit down with Secretary Sebelius and have that conversation about ways that you can expand benefits and reach more Pennsylvanians, but again, in a way that makes sense for us at a state level. Problem with expanding Medicaid as envisioned under the DHCA is, at the end of the day, it results in a substantial, even taking out of the equation all the health savings, over the course of, I think, 8 years, we're looking at like an additional $4 billion that the state has to pay. And you're looking at a result where 1 in 4 Pennsylvanians end up in Medicaid or some other state program. We don't think that's a good result. Again, we want to find ways to get people working in commercial insurance and not necessarily in state programs. And that's part of the discussion we're going to have with Secretary Sebelius and HHS. So to answer your question is, we have said we don't want to do it based on this system. We're willing to look at options, but you've got to work with us.
Commissioner, can you maybe speak to the operation? I know that there's still a lot of unanswered questions, but what is the expectation as far as in a federally facilitated marketplace that the federal government will operate versus what the state will operate?
In terms of the exchanges, one of the interesting observations that was made almost immediately after we decided that for now a federal exchange will be the option that we're going to go with for the time being, was the consumer advocate community said, we would prefer to have the state do it, but at the end of the day, from a consumer perspective, it really won't make much difference. You will still be able to go, there will still be an exchange, you will still be able to go in and purchase products. HHS has already indicated that for the first couple of years that all plans that want to operate and sell products in the exchange will be able to, which is good news because there is concern that they might limit participation to more national plans and regional plans, which would include all our blues, may not be on an exchange. That's not going to be the case. So from a consumer perspective, it won't make a difference. And again, as a regulator, that's my biggest concern is how does this affect consumers? From a state perspective, there's a question about how much authority, how much control, how much input we will have with a federal exchange, and what's the dynamic going to be between federal government and state government. We've already made it clear, and I think HHS has kind of agreed that we are still the regulator of the marketplace. We still have a job to do to protect consumers. We still have a job to do to review and approve or disapprove rates, review and approve or disapprove forms, enforcement actions against agents and producers, enforcement actions against insurance companies where warranted. So we will do all of that. But the feds will be here in some way or another. They will be linking into our Medicaid program. They will be linking into our CHIP program. And there will be some areas where you as consumers, if you have a question or problem with your exchange purchasing experience, you're probably going to have to talk to somebody at HHS about that because, again, that was part of the decision matrix is if there was an issue with the exchange specifically, that would be handled by a call center, in this case operated by HHS instead of us. So we're going to have, there's going to be gray areas that we're going to have to work through and figure out who's doing what and make sure that we on the government side are all on the same page so that consumers don't fall through the cracks someplace.
Follow up on the rate regulation comment. Is there a possibility then, we're talking about rate shock, would the state have the ability to disallow a plan in the exchange if their rates were more than what the state believed they should be?
Well, we have the ability to decertify a plan, but that's different than sort of approving or disapproving rates. We have the ability right now, which we didn't up until about a year ago, to now more vigorously review small group rates. So if somebody comes into us with a 20% rate increase, we're going to look at it. We're going to look at it really hard. We're going to make sure it's actuarially justified and that, you know, their assumptions are all correct. You know, and in some cases, they may be able to show us they are, and if that's the case, then, you know, as I talked about, for some of these products, it's going to be what it's going to be in terms of the rate. But we are already disapproving or pushing back on rates that we do not believe are actuarially justified. So we will have that ability on a rate filing by rate filing basis. If it gets cumulatively to a point where we see that type of activity by a single company combined maybe with poor performance on an exchange, then we could look at potentially booting them off the exchange entirely, but that's obviously a much more serious determination.